David's all in. Cheers to that. Will you show the vlog what you got, David?
For sure.
Yeah. What you thinking about? Oh, you called? Okay, twice it is. Open your hand, boys. Oh, ace 5. Decent. Oh, David. That's the first. Second. Oh, David, you got it, mate. We have got our chill weekend out of the way. We are nice and ready to go for the new weekend markets. And I have to tell you guys, last week was tough, man. I'm telling you, I took a loss last week. Thankfully, only in half risk. But then I took a bunch of other trades that went to break even, basically. So yeah, it was tough. Last week was tough. The damage could have been worse if my emotional state wasn't controlled, because I definitely felt frustrated. So starting on the weekly chart here on QECAD, what we know is that price is bouncing very, very hard from macro support. We've captured liquidity from MS, which usually leads to very large moves, right? Liquidity captures are essential if you want to play reversals from a high value area like this macro support level. However, price has already pushed up very, very far, right? We're already extended in the move, and we are now approaching this key resistance level right here. And so whenever a move is already this extended, this mature, we don't really like going long anymore, right? Just because oftentimes the move will be a lot more volatile in areas here, and that makes it a lot more difficult for us to basically manage our risk, capture profits, everything, right? Toxic volatility is just bad. So we're looking for shorts here, actually. Now, we have this zone where we notice if price completes 90% of the move, so from the beginning all the way to the next relevant high value area, it tends to reverse. Price doesn't always need to complete to the most obvious high value area. Sometimes it can reverse before it completes it. And usually that happens when price has completed 90% of the move, which is this final red box right here. So that's the hard time frame bias. We don't want to go long because this move is very extended already to the upside. We're already very close to key resistance. And we know that when a move completes 90% to the next relevant high value area, we have short opportunities, all right? Now, once we get to the H4, we actually do find this point of liquidity. That's the first thing, right? A POL is simply a resistance level on the lower time frame. So we're talking about the H4 or the H1. So we find this resistance, this POL on the H4, serving as our relevant value area to find the shorts from the 90% completion just now that we were talking about. And what makes it even better is we actually find a reversal structure. This is called an ascending channel, right? They do tend to reverse on the third top. And so this is how I entered the trade. We go into the H1, we find the completion, price captures liquidity as usual, right? We love liquidity captures, guys. That's ideal for us. So price captures liquidity above the third high, and then we reject sufficiently on the 1 hour. Now, this is where I think I made a mistake. I'm pretty sure, right? Well, the truth is I did make a mistake. The first thing is that I entered this trade aggressively. I didn't wait for my confirmation, which would look something along these lines. So we have an origin impulse down, followed by the confirmation structure, and then we entered the trade there actually, right? But instead, I used my more aggressive entry. And I believe that was the wrong place to do so because my reversal structure is ambiguous. Why do I say that? For the simple reason that this could have been the origin point, or it could have been this. And if it was this, the structure would look very different. It would look like that. And whenever you have ambiguity, that's the key word here, all right? If you're confused about where your structure should start, oh, is it from here? Is it from here? That's usually already the market telling you that this should not be entered through an aggressive entry like I did here. Like just from the top, no confirmation, just from one rejection candle. That's the mistake that I made. Whenever there's ambiguity, whenever something is not clear, you should not be entering without confirmation like I did here. and so I paid the price, right? Boom, instant loss. Yeah, not my best decision making, to be honest. Just trying to be transparent here. I don't always trade the best. The only silver lining I have here is I only lost 0.5%, so I'm going to put the screenshot up right now. But at the same time, like, I don't want you to think like I'm underplaying the error that I made here, right? I want to be forthcoming. I want to say, dude, like, this shouldn't have been a trade in the first place. I think it's just too aggressive, and that means I was wrong in taking the trade. Whenever you're aggressive in the wrong place, you're fucked, right? There are moments where we can trade more aggressively, but knowing when that is key to everything. So if you don't know yet when to trade aggressively, honestly, it's a lot better for you to just lean conservative, because what that leads to is essentially you trade less. So that's the not fun part, right? I understand that a lot of new traders want to trade more, but the fact is, if you want to succeed and you want to do it quicker, you should be trading less, and you should be focusing more on the quality of the trades that you take, which means oftentimes that you need confirmation, right? Whenever you're entering, instead of trading aggressively. We are now on the way back to the apartment. We have our student call in a couple hours, where every night we break down the relevant opportunities that we have for the coming day, and then we talk about all things trading, whatever somebody is going through, whether it's good times or bad times. We always try to just plug in any hole that needs to be plugged instead of letting it leak for too long. And I think that's the main issue with traders, is that first, they don't even know if what they're doing is right or not. And even when they know what they're doing is wrong, they don't really know how to fix it. And so that's what I'm really trying to change about how a trader learns and how they grow throughout their journey. In Tenacity, I try to plug the hole ASAP on the same fucking day. If you have a question, we answer it right away, so that it doesn't fester in your head. It doesn't translate into bad trades, bad decisions, more losses, all that.
Nah, to be honest, I was looking for short pas di sini.
Yeah,
kayak udah siap,
that's correct.
Kayak looking for short. Nah, tapi short itu udah langsung mati, instantly killed by this candle, which is tadi siang. Nah, after that, I was looking for continuation.
All right, we are back from lunch, and now I'm about to show you a trade that I took yesterday that ended in a very painful break even. So the theme of this vlog, it turns out, is speaking about very difficult market conditions, because honestly, April has been quite tricky overall. There have been several trades like this where we did everything right, but our management strategy has not really been fitting the market today, you know, or this month, should I say. So starting on the daily chart here on Euro Yen, what can we see, right? We can see that price is currently moving up through a reversal structure. In our strategy, whenever we see an ascending channel like this is a reversal structure, and we're trying to look for shorts from that third top. That's the simplest way I can explain this. Now, moving into the 4-hour, we indeed confirm that we have a beautiful 1, 1, 2, 2, 3, right? That's a wonderful structure, and we have captured liquidity above the highs of the third top, which is always a good thing. We love it when price captures liquidity from our value areas. So in this case, we are looking for our confirmation entry. We're looking for a shift in momentum, which is a push down into the first continuation structure, right? Which we did have here. So let's get deeper into the lower time frames to see that. On the 1-hour here, we get our push down from our value area, and here we have our continuation structure, which we refine on the 15-minute because this is still very early on in the move. Literally, this is the first structure of this move. And usually, these structures, the first ones that come up on top, they are very small, right? So we can refine them on the 15-minute. And once again, we see 1, 1, 2, 2, 3. We enter the trade through this hangman rejection, which is also a new entry type for me. Usually I don't enter through these hangman rejections where we have a wick, because generally they're not as safe as like the full body closes. For example, like this. These full body closes are much better. They're a lot safer. Or we have something in the form of a shooting star like that. That is also really, really good. Let me just clean that up, right? If we have something like this, that is also a really good rejection candle. Whereas a hangman is essentially the opposite of this. Now, what I've learned recently, I have found that the hangman rejection still works, although it does tend to create more volatility before we go in our favor. So my stop loss is usually a lot safer than usual whenever I'm entering through a hangman rejection now. We have our trade playing out very, very well. And then I have broken even here, right? Because we're already running 2% at this point. And then price made this disgusting retrace to tag us out for break even before it completely went in our direction for a clean 5% win. So obviously, this is very painful. This sucks. I'm not gonna sugarcoat it. Sometimes, guys, in trading, this kind of stuff will happen. It's literally a part of the game, so let's not beat ourselves up too much, because then that will make you paralyzed. Because the goal here is for us to learn, like, what's going on here and what can we improve. And so after a ton of reflection, I've realized that current market conditions, they're just a lot more volatile in not a good way. Our directional bias, our entry criteria is still correct. Everything's still okay in that sense. But the way price is delivered is now a lot more dirty. And for that reason, I have to be a lot more lenient with my break even. So this is what I'm gonna do from today onwards. I have to wait for my structure to be cleared first, and then I can take risk off the table. So I'll be breaking even a lot later in my trade than I usually do whenever I take clear continuation structures like this. So that's it for Euro Yen. Definitely painful, but I'm just trying to be as forthcoming as possible so you guys can see the ups and downs that traders go through day to day. It's not always gonna be like banger trades, right? Sometimes even the banger trades will just trick you out before they play in your favor. Actually, there's this book I do recommend you guys to read. It's called Feel Good Productivity. But if you don't read it, I'm just gonna tell you the punchline, which is, if you're feeling good, that's when you're performing at your best. It's been proven now. This is no longer an opinion. If you feel good, if you're happy, right, you will be a lot more productive as well. So please protect that inner world in your head. Like, don't shit on yourself too much for making mistakes from time to time, because then it'll paralyze you from the learning process to come next. And if you don't learn from your mistakes, then that's a true loss. Whereas if you can learn from your mistakes and you can implement new improvements in your next trade after the mistake that you made, that's literally what growth is. And that's all we're in here for. We're trying to grow into becoming better traders. These are the markets we're dealing with. Beautiful push down from our value area, but look at what happens next. Just insane whipsawing, man. No continuation whatsoever. Just dirty price action overall. Just so dirty. Patience. What I'm gonna do now is go home. I've just finished my edge work. It's only 2 p.m. But if I stay in the charts longer, I'm just gonna be more frustrated right now, and I know that that's gonna happen. So this is the time to take a breather, put a workout in, come back to the charts, see what happens next, and then if still nothing is interesting, I'm just gonna go back to edge work. Oke, terima kasih Pak. Oh, there he is. What's up, Lajardo?
Talk about, and this is the major correction, right? It goes up by almost
What a beautiful way to start the day. Just look at that. I can look at it all day. Captured most of the move here. As we can see, price is now starting to retrace, and usually in these areas, right, which is the bottom of the range, let me just show you real quick. So this is the structure that we were trading, and once we reach the bottom half of the structure, that's where usually a lot of toxic volatility likes to appear, right? And toxic volatility is not the kind of volatility that we can ride, that we can manage through. So it's best to just get out of the position once price reaches the bottom half of our range. We're gonna talk more about this once we get to my favorite cafe, but until then, we're gonna get some breakfast and some drive-through McDonald's because I don't have time. Iya, boleh minta McSpicy satu sama
Burgernya pakai satu
a la carte aja ya.
Ya,
Sama double cheeseburgernya satu ya.
ala carte juga.
Iya. Yeah, that's kind of disfigured. On second thought, you know what? We're gonna take a little detour here. I have a watch that's been on my head for like 3 weeks and I'm gonna get that shit. We're about to get this baby a new friend. Okay. Okay, but seriously, I think this will be the last moon swatch that I ever buy. Hopefully. Because I know myself, when I start to get addicted like this, I might just keep purchasing things that I might not even like that much. That's why I waited 3 weeks to get this in the first place. Like, I just wanted to make sure it wasn't like a infatuation purchase or an impulse purchase, you know? Plus, today's a great day to do it. Woke up to a lot of profit. And that was not the easiest trade to take, which we will be talking about right after this as we head to the cafe. What's up, bro?
Where's the watch?
In my car.
Wow.
I'm still using the OG one.
Well, which one did you get? The white and red one, yeah?
No,
White
I
and
got
red.
the Earth face. Didn't expect there to be cookies in here. Oh, fuck.
Then we would use like say low-fat cheese, we use low-fat egg to make the experience as enjoyable as it is in a restaurant.
Yes.
So the way that, for example, this company does it is that you can freeze them, so you can microwave them, but then really push up the thing so that there's ventilation. That's it. 4 or 5 minutes, you're done. You get a full class meal.
Mereka ada shelf life-nya, misalkan kalau by 5 days, the next amount of days gak laku, lu di return bro. Lu dibalikin, the next pack juga dipotong dari harga restoran lu.
Alright, getting into our pound Aussie trade now finally. What are we working with on the weekly chart, right? As usual, we always begin on the weekly chart. We find our high value area, which is this macro resistance all the way back from 2020. And price has captured a ton of liquidity above that level with this beautiful breakout. And then it's followed by a wonderful rejection in this almost bearish engulfing candle, right? That's just a really powerful candle close. And the important thing that comes next is how price is following through. What is the follow through we're getting after that beautiful rejection is a beautiful consolidation. We like consolidations after strong impulses down from our value area because it shows that the move means business. It's real, right? It doesn't instantly reverse back up or any bullshit like that. In fact, it's responding very cleanly. It's a very muted consolidation in the higher time frame. This is what you want to see, right? Whenever you're looking for real moves, right? Moves that you can play continuations from. So once we get into the daily chart, this is the next key tip for you, right? So if we find a really strong crash move like this, right, where the candle is unnaturally large, usually price will need more time to digest the magnitude of this move, right? It's really, really, really strong. So it doesn't usually follow through with a small consolidation and instantly goes again. No, it needs a lot more time whenever we find these really, really big moves, okay? So we give it time. And this has been since what? 10 April. Today is May 1. So this has been consolidating for over 2 weeks now. And that's normal for these kinds of crash moves, all right? Remember that. Once we get to the H4, we find our continuation structure right here. That is a wonderful continuation with 3 clear tops right there. Sorry, I'm not gonna be as fast, guys. I'm not using my mouse. I'm using my trackpad. 1, 2, 3 clear tops. Clear bottoms as well right here. So we capture liquidity from our third touch, right? That's beautiful. Look at that wick, just capturing liquidity. And then we find that beautiful bearish engulfing rejection to confirm that our continuation structure is indeed playing out. So this is when we dig into the 1 hour chart to find our continuation plays in the lower time frame. This is where we actually enter our trades. So we see that happening right away. We get our high quality origin impulse, which is always requirement number 1. And then the next and final requirement is finding our continuation structure, which we can refine on the 15-minute chart. And once we get to the 15-minute chart, we find this beautiful 1, 1, 2, 2, 3. Just so, dude, that's a wonderful development. Look at the arcs within the structure. Look at the 3 clear points. 1, 2, 3, right? And 2 clear bottoms as well. We capture liquidity above our third touch once again. And then once we get that rejection on the 15-minute, we enter the trade with a limit order like so. Stop loss safely above. And boys, this is our beautiful trade. Just played out for almost 7% profit. And the reason why I said that this trade was a little bit harder to take than usual is because we are currently adapting to the changing market conditions in the current tariff wars, right? So what has changed about the market is that we are getting larger corrections in the beginning of the move, where usually we don't. So moves begin a lot more volatile, and then we get our beautiful follow through, which is the trade that we are in. Usually when a structure is this large, this early on in the move, I don't like it. But that's how we adapt. Like, I have the data now to show that, okay, the market today likes slightly larger structures at the top where the delivery can also be quite messy. If you notice this, that's pretty messy, right? We push down, we push instantly back up, but we just have to survive this initial volatility before our anticipated move arrives. So yeah, that's the simplest way I can break down this trade. Hopefully you guys took some value from it. And I hope the audio quality has been pretty damn good because, you know, trying to do this in a cafe, bringing you guys to new places and shit. This is one of my favorite cafes in Jakarta to work, at least. So, yeah.
What's up, vlogger Alex?
Dude, he's like that kid in the corner eating glue. Look at him, man. When the other kids are playing, he's eating glue at himself.
100.
What the fuck? What the hell did you do, man?
I don't know, bro.
What? Oh, shit!
Shit, nigga.
Against the full house. Oh my god.
Damn, you fucked the box like.
Yeah, bro.
Alright, it's cleanup time. It's cleanup time, baby. You get some water in there, man.
A lot more, bro.
A lot more. Alright, Marco. Let's get it. Oh, that's a good technique, bro. Why don't you just like...
Yeah, guys, this is life as a first-year tenacity trader. Whether it's the charts or cleaning up your boss's house.
Oh, you ada soap, ya?
Yeah,
Kita taruh di sini sama. We're playing, bro.
Hour.